Hello everyone, happy Friday. I hope everyone has had a lovely week. It was a blast to be able to talk to you all on Tuesday about not just what we've been working on for Sectors Made Simple, but talk about the short squeeze a little bit more. We've gotten to see that the market has calmed down a little bit, so now I want to go to another topic that many of you have been asking me about. I've been getting support questions about it, I've been getting questions about it in chat, so today I'm going to deliver. Many of you have asked about cryptocurrencies, more specifically Bitcoin. So today I'm going to explain to you what Bitcoin is, how it's created, who runs it, or in more general terms, what the cryptocurrency market is. It's not just a currency, it's also an exchange where you can go buy and sell cryptocurrencies as if they were real US dollars or British pounds, or European euros. So today, that's what we're going to talk about. Today's webinar is going to be all about cryptocurrency. Hello, everyone we have with us. Hello, Blaze, Gloria, Andrew, Adelita, Chela, Kira, Delia, Rina, Elva, Eddie, Pablo, Juan, Vero, Jacqueline, Meli, Karina, Maria, Romulo, Juan, and Josefina. It's good to see so many of you back, and some of those names were new as well. So thank you all so much for joining us today. If you're new, please say hi. It's always such a pleasure to get to welcome more people into these webinars and share in the information that we like to be able to give you all. So let's get started because there is a lot to talk about in the world of cryptocurrency. So the best place to start is where we always seem to be starting these webinars. What is it? What is cryptocurrency? It's this big, crazy word, but there's one word in there that should be very familiar. Currency. Cryptocurrencies are simply a type of currency, much like a US dollar, a British pound, Russian ruble, so on and so forth. But instead of cryptocurrencies, or instead of dollars, which I can pull out a $5 bill or I can pull out a 1-cent coin, cryptocurrencies are not things. They are not paper money. They're not coins or they're not metals. They're digital. They're zeros and ones in a computer. So cryptocurrencies exist only online. You cannot go to an ATM and withdraw your cryptocurrency as paper money. You have a crypto wallet, which is on your computer, and in that it stores how much money you have in the form of that currency. So unlike most types of currencies that are paper or are tied to a government, cryptocurrencies, no one person owns that entire market. No one gets to decide who has what money, or no one runs that currency beyond whoever created it. The way that it works is it's run and maintained by the community. The people that invest in that cryptocurrency are often the ones that maintain it. So no one country, or in the case of the euro, group of countries owns a cryptocurrency. They are not government run. They are what's called decentralized. There's no center in which all of the money comes back to. There's no one place that mints all of your coins. For example, every coin that is minted in the United States comes from one of 2 or 3 different mints. You can see which mint your coin came from. If you look on it, there should be a little P, a D, and there's also an S, right?
I think so.
I think there's an S as well, but it will tell you which mint that coin was minted in. For cryptocurrency, there is no mint, there is no Federal Reserve, there's no national bank. It's only zeros and ones on a computer. So because of that, you need to make sure that DPS and W, so there's actually 4. But cryptocurrencies, there is no mint, the way that all of this works is it's all online and all in what's called a blockchain. And I'll talk about that in a minute. But what I want to really drive home here is cryptocurrencies, you can't go to your computer and copy and paste them like you would for just like you would a normal file. These are something that they're heavily what's called encrypted. That's where the word crypto comes from. It is not just zeros and ones in your computer. It is advanced mathematical formulas that they use to make sure that you can't create something that doesn't exist. And it allows them to make sure that all transactions, so all trades, are recorded. Counterfeiting is impossible, and fake coins don't exist, at least in theory. So how does this all actually work? How do cryptocurrencies exist? Well, again, they only exist in a digital form. They only exist on our computers, on our mobile phones, and on the internet in zeros and ones. And all of these currencies, or coins as they're called, are put, instead of in your pocket in a wallet, they're put in what's called a digital wallet. Just like your wallet, but online and digital. So that is how you store cryptocurrencies. You store them in your wallet that is on your computer or on your smartphone or in usually just one place. And I'll get into that in a little bit. Maria, yes, these are incredibly secure because there's so much that goes into it. But I'll also show how just because it's secure doesn't mean trading or investing in cryptocurrencies can be safe. You need to take a lot of care when you invest in cryptocurrencies because of some factors I'll get into later. But as far as Bitcoin, like the actual zeros and ones of Bitcoin, it's incredibly secure. So to give you I'm going to go through the math of it all. There is a formula that how all of this is stored is, let me see if I can pull it up. They use what's called 256-bit encryption. So to give you an idea of how big that number is, it means 256-bit is the possible number that can exist from 0 to whatever the biggest number is 1.5 and then 77 zeros. So it's 1.1 followed by 77 zeros after it. That is a massive, massive, massive number. So the way that all of this works is it creates a number random between 0 and this crazy big number. And then in order for you to what's called decrypt it, so in order to turn it back into something that you can actually read, you need to know the two numbers that when multiplied together equal that big number. And there's only two that will ever work. So it requires, if you wanted to be able to hack something that was encrypted with 256-bit encryption, you would need to guess the two numbers that multiply together to equal this massive, 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 massive number. I'm actually curious. How many atoms in the universe? 10 to the 80. So to give you an idea, the number of possible numbers in 256-bit encryption is only 1,000 times smaller than the number of atoms in the universe. The smallest thing that we know to exist in the biggest scale we can imagine in space. That is how big of a number we're talking here. So it is technically very secure. But going back to what we were talking about with how these are stored, we store them like we would in wallets. But there are there are some cryptocurrency ATMs, but they're not common. You can't go down to your local 7-Eleven and withdraw cryptocurrency. Or you can't just go to the stock exchange and buy and sell cryptocurrency. The way that it works is there are specific exchanges for it. But beyond that, you don't buy Bitcoin with other Bitcoin. You invest in it using real currency. So what happens is Bitcoin has value. It has a US dollar value that is along with it. Now, the reason I said there are some Bitcoin ATMs is because there are. Certain countries and certain places accept coins or Bitcoin or even some other types of coins as valid payments. So you can go in, use a digital wallet on your phone, and pay for your groceries, pay for all sorts of stuff, or even pay for a restaurant if that's your kind of thing. So it's kind of crazy that that's something that exists, but it is. So there's no government that manages cryptocurrencies. There's no one person that makes sure that everything that happens is correct. There's no fraud alert. So how do we make sure that everything is real? How do we make sure that what we are seeing, or when I say Jonathan gives Julie 10 Bitcoin, who looks at that and says, I approve? This is where we get into what's called the blockchain. So to talk about blockchain, we first need to talk about how coins are created. How do we get these crazy little things that don't exist in the real world? So coins are created much like how a company creates shares of a company, of shares of their company rather. Initial coins are created, so they say, here's 1 million coins, and we're going to sell these 1 million coins to investors. And they will have what's called an ICO, or initial coin offering. Now, this may be a familiar, almost familiar term, because there's something very similar in the stock world called an IPO, initial public offering. That is where a company, when they go public, they say, hey, we are giving you 1 million shares and we're selling these shares at $60 per share. That is how an IPO works. They say, here's how many shares and here's the price. An ICO, or initial coin offering, is the exact same thing. Here's 1 million coins. They're $1 per coin. Vámonos. Simple as that. So, is that the end of it? Is that all we get to see from this coin? Is what they shove out to the market right away? No. What happens now is after the initial coins are released, more coins can be created through a process called mining. Now, mining is a kind of weird word, but let me see if I can break it down a little bit. Hi, Melly. Good to see you. Mining is the process of turning your computer into something that can generate these coins. So I'm a gamer. I invested more money than I care to mention into building my own computer that has a lot of very, very expensive but powerful parts in it. Those parts can do a lot of calculations, can do a lot of things very, very quickly. So what these mining operations, or what mining is me saying, hey, I have a really fast computer. I'm going to give my computer to this coin, and by me giving them my computing power, by me lending my power to them, I then get something in return. what I get in return is I get coins back. So let me see if I can put this in a little bit different of terms. I have a bunch of stuff. I have a bunch of lawnmowers, garden clippers. I have a bunch of things to go take care of my front yard, backyard, lawn, all of that. My next door neighbor doesn't. So what I can do is I spent a lot on my lawnmower. Here, neighbor, borrow my lawnmower for the day. So I lend him my lawnmower. He then uses it, gives it back to me and says, hey, thank you so much. Here's $10 or here's a loaf of bread that I baked. That's exactly how these coin mining work, where I give my computing power, I give the power in my computer, I lend it to someone else to use, and then in return, I get coins as payment. Now, the reason that mining is a very good word is because for most coins, every time a coin is mined, the next coin becomes harder to get. So just like any material, any gold or any commodity, every bit of gold you take from the earth, there's now a little bit less gold or there's a little bit less oil. So now getting more gold, getting more oil, getting more silver is harder and is more expensive. So cryptocurrencies work the same way, where every coin or every little bit that I take makes the next little bit that much harder to actually get. Now, what are they actually doing? Because remember, I'm lending my powerful computer to somebody else to use. What are they actually doing with that power? Well, the answer is it depends. Some coins actually have reasons. Their computing power is used for scientific research, machine learning, medical research. There's a lot of technology and a lot that can happen, a lot of really good causes that use blockchain and cryptocurrency as a way of basically borrowing computing power and in exchange giving something back that doesn't cost them anything. So that's a very rare case, but the most usable or the most common case is what's called maintaining the blockchain. It's what do they use the computing power for? To make sure that the blockchain works properly. Blockchain. What is it? Well, before I say what a blockchain is, we need to explain why it is. Well, because there's no central bank, there's no government that watches over to make sure no one's counterfeiting money, no one is spending money that they don't own, that no one is cashing the same check into banks. All of these payments, all of these trades, and all of these new coins that are mined need to be verified. Someone needs to look at that transaction and say, check, this is fine. And then add that to what's called the ledger, or the list of all of the trades, all of the new mined coins. So the other way to think about it is the blockchain is a lot like the ticker in the stock market. We talk about the ticker symbol quite a bit, but the ticker was quite literally a little receipt machine that there was one poor little machine. This thing had to work harder than anyone else in the stock exchange, but its job was every single time any stock was bought or sold, that ticker symbol or that ticker tape, ka-ching, printed out a receipt. And then another receipt, and another receipt, and another receipt. So that ticker tape is what it's called, became how we could track buying and selling of stocks. They would literally sit there, read the tape, and then had a giant board and a bunch of little people that would go up, grab all the different numbers and change the numbers by hand. Before we had the internet, that's how it was done. Someone read the tape, screamed out the new price, and someone went up to the board and changed the price for that stock. Blockchain is very similar to that. Blockchain records all coin trades that happen, new coins that are mined, and makes sure that all of this, no one can get in, that the blockchain is secure, that there's no one that can hack it, and it's very rare, and for coins like Bitcoin, has never happened. But it's always a worry. Someone needs to be encrypting all of this. So the people that mine Bitcoin, their power is going towards this. Miners give their computing power, their super powerful computer that they spent thousands of dollars on, they lend it to the cause, or to making sure that the blockchain is kept, that new entries are added, that all payments are verified, and that what they receive in return is more coins. I'm going to stop talking about these crazy big terms, and I'm going to bring it back to a cryptocurrency that everyone should be familiar with. And then we'll talk about all of this in the context of that one coin. Any guess as to what that coin is? I'm not going to wait for the delay because I'm sure many of you already know. It's the one coin that you always think of when you think of cryptocurrency. Bitcoin. Bitcoin is often considered the first cryptocurrency. It was released in 2009 by Satoshi Nakamoto. And I will tell you this right now. Satoshi Nakamoto is not a person. He has never been a person, and no one knows who actually founded Bitcoin. All we have is the white paper, the sheet that said what Bitcoin is, what blockchain is, how they encrypt it, and how it can be mined, as well as the total number of Bitcoins that exist. There was never, and still has not been, a single person that has come out and said or been found to be the creator of Bitcoin. It's just this magical person that suddenly created Bitcoin, poofed it into existence, and said, there's 18 million of these in the world. Go. So that's how Bitcoin was created, by a person or group that we still have no idea who they are. But much like we have the dollar symbol for dollars or the pound symbol for pounds, we have a symbol for Bitcoin. It's a B with two little lines above it and below it, or instead of saying USD, GBP, EUR for different currencies, US dollar, British pound, euro, respectively, we use BTC, or Bitcoin. Now, I'm sure many of you know that Bitcoin is a little expensive. It's more than $35,000 per Bitcoin. So what's going to happen when we try and say, I want 1 cent worth of Bitcoin? It's kind of hard to do that. So what they've done is they've said, instead of having dollars and cents, what is the smallest amount that you can have? Like, what's the smallest that we have in US currency? We have 1 penny. So 1 penny for Bitcoin is what's called a Satoshi, named after the magical man behind the curtain, Satoshi Nakamoto. And 1 Satoshi is 1 100 millionth of a Bitcoin. So 1 Satoshi is the price of Bitcoin divided by 100 million. That is a very, very small bit. Where now, even with Bitcoin being almost $37,000, 1 Satoshi is still a couple of cents. So it's very easy for us to be able to buy small amounts of Bitcoin because we can buy not in Bitcoin, but in Satoshi. And Satoshi are just like saying 10 cents, 15 cents. It's the smallest amount of Bitcoin that we can have. Now, as I said before, the mining power or the computing power for Bitcoin, it's not used for some medical research or for some scientific research. It's just used to maintain the blockchain. It's just used to check and verify and make sure that all of these transactions are safe, secure, and correct. Fun story for you all, though. Bitcoin, it is a cryptocurrency. There are Bitcoin ATMs that you can go and you can stick in US dollars and get Bitcoin in your wallet in exchange. But what if I told you that you could even go and buy restaurants using Bitcoin? Well, only 1 year after Bitcoin was created, that happened. In 2010, a business person bought two Papa John's restaurants for 10,000 BTC or 10,000 Bitcoin. Now, let's put that in context. 10,000 Bitcoin. If we took today's price of Bitcoin, which is $37,864.10, means that this guy, if he held those Bitcoins till today, sold those two franchises of Papa John's for $370,864,100. Oh, I heard a weird sound. So yeah. So yeah, someone, if they still had those 10,000 Bitcoins, just sold, or rather bought, two Papa John's for $370 million. So let's talk a little bit more about Bitcoin now that we have all of this in context. Romulo, I see your question. I promise I will answer that in this presentation. So just hold on to that. If I don't answer it, make sure you ping me and I will answer that for you. Someone recently sold his restaurant for 25 BTC. Yeah, that's an investor if I've ever seen one. But yeah, there have been real commercial transactions using Bitcoin as a currency. Lucy, I will answer that as well. Don't worry. So this looks like a duplicate slide. It is. The other thing I wanted to say is that with Bitcoin, we've already talked about how they say how many exist. For Bitcoin, there is 21 million Bitcoin that exist, not in the world, but online. After the last Bitcoin is mined, that's it. We never get more Bitcoin. So where are we at today with Bitcoin? As of right now, as of December 17th, 2020, so about a month and a half ago almost, there was 18.5 million of those 21 million that have been mined. So what exists right now in the world? 18.5 million Bitcoin. What's the most there can ever be? 21 million Bitcoin. So we're running out of Bitcoins. but let's look at exactly what that all means. So remember, Bitcoin miners, they're the person that actually checks a little box and says, okay, this transaction, John giving Julie 100 Bitcoins, ka-ching, they put in the receipt. So that's what the miners do. They make sure that when Jonathan wants to give Julie the Bitcoins, they are the person that takes the money and then gives it to the other person and then says, I made sure that this happened, puts their stamp on it, and then they get a little gold star. And then every 10 minutes, those gold stars turn into Bitcoin. So every 10 minutes, a block is completed. A block is the 10-minute activity and everything that happened in those 10 minutes. And then Bitcoins are given to all of the people that contributed or gave their computers to make that block happen. So you go work today from 9 till 5. You get paid your time from 9 till 5. Same thing with Bitcoin. You go and you put in 8 hours of work, you get 8 hours worth of pay. How much pay? Well, depends on how much power you gave compared to how much power there was. As of right now, each 10-minute block pays out 6.25 Bitcoins. So every 10 minutes, 6.25 Bitcoins are created, and it's paid out to all of the different people. So I've talked about this confirmation, this ka-ching, or the stamp of approval, rather. So this stamp of approval, the bigger the transaction, the more people need to confirm it to make sure that it's valid. So I'm just going to give 2 examples, but this is kind of a scale. This goes from 1 to 6, where one confirmation, one single person saying, I approve, is enough for payments less than $1,000. For any payments greater than $10,000, 6 people are required. So 6 different computers all need to say, we looked, we agree, this transaction happened, Jonathan gave 100 Bitcoin to Julie, put it up on the board. So this is how Bitcoin's blockchain works. The power here is that there's no one person that has all of the power. Everybody works together to make sure that there's no fraud, there's no counterfeiting, and that everything is safe and secure. So everyone works together to make sure that these coins are correct. Now, I don't just talk here about Bitcoin. I've been talking about cryptocurrencies, not cryptocurrency. So, people saw what Satoshi created with Bitcoin, and they wanted in on what Satoshi made. That idea of blockchain, a decentralized currency. No government owns it. It's owned by the people, for the people. It's slightly anarchist, but kind of cool. So others followed. So enter the world of altcoins. It's another phrase for alternative coins or alternative cryptocurrencies. So since Bitcoin's success, there's been over 4,000 different cryptocurrencies that have been created. Some are wildly popular, like Ethereum. Others are entirely just an internet joke, like Dogecoin. But regardless, the reason that so many exist is because there's no requirement to have an ICO. There is no rule saying you need this much revenue and you need to make your financial filings public and you need to have a board of directors and you need to have blah, 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 blah. Boring finance stuff, right? An ICO, all you need is an idea, a dream, and a bunch of investors with a bunch of money that thinks your idea is worth investing in. So this goes back to something that Romulo was asking. What's the value here? What is the value of cryptocurrency? Well, it's hard to say because most stock prices are backed by the performance of the company. Most bonds are backed by the currency of that government. Most currencies are backed by the reserves of that government. Even silver and gold are backed by a limited amount of supply, but there's nothing else, just limited supply. So the value of gold, the value of silver, yes, they have real uses, so there's demand for them as materials, but the real value there is just what others are willing to pay for it. When I say selling 1 Bitcoin, what it's worth is just what the next person is going to pay me for it. So that's the crazy thing about Bitcoins. Hello, Sharani, good to see you. The real value and the only value of a cryptocurrency, of any coin, Bitcoin, Dogecoin, anything, Stavcoin, not an actual thing, all it is worth is what someone else is willing to pay you for it. It's not backed in silver. It's not backed in gold. It's not backed in a company. It's just backed in the demand for it and the supply for it. So that being said, we've talked about this. I'm not just going to go run outside my front door and say, selling 1 Bitcoin, $40,000, and hope that someone across the street says, I'll buy it. These have to be bought and sold somewhere. Where is an exchange? This should be a word that you're all very familiar with because it's something that we have in the stock market. We have the New York Stock Exchange, the NASDAQ Exchange, the Chicago Options Board Exchange. All of these are exchanges that exist. The same thing exists for cryptocurrency, where instead of selling stocks, instead of trading options, they trade cryptocurrencies. And these exchanges, much like Facebook is listed in the NASDAQ, Tesla is listed in the NASDAQ, so on and so forth, all stocks are listed on 1, maybe 2 exchanges. Exchanges will say what coins can be bought or sold in their exchange. Now, unlike companies that it's very rare, if not impossible, to see a US-owned company listed on multiple exchanges, one type of coin can be sold on multiple exchanges. So what does that mean? That means that I can go to ABC exchange and buy my shares or buy my Bitcoin, and then I can go to exchange XYZ and sell those. Or I can sell some to XYZ and Juan de los Palotes exchange. So really, this is just a marketplace. It's not like a single exchange where everything comes through one place and goes out the same place. Every single exchange can choose what you can buy and sell, but what they buy and sell can also be sold elsewhere. Now, the current biggest one, and this is strictly by how much money goes through this exchange every day, is ZG.com. This is currently, today, February 5th of 2021. The largest exchange by volume traded is ZG.com. How much money goes through ZG.com? Any guesses? $1 million, $10 million, $50 million? How about $18 billion? As of January 25th, $18 billion were traded through ZG in a single day. That is a pretty large market, if you ask me. So now we've covered what cryptocurrency is, where you would go to buy it. Okay, now I bought my Bitcoin. Where do I put it? Well, just like you would put some dollar bills in your wallet, you put your cryptocurrency in a wallet. So a wallet is just like what it is in the real world. It is a place that cryptocurrencies are stored. Josefina, I'm going to write down that question because I want to answer that at the end once I've covered all of this craziness. So will BTC replace USD? I've written that down. I promise I'll answer that. That is a fantastic question. So a wallet, much like you would store dollars or your credit card in it, is where cryptocurrencies are stored. But it's not as simple as that. Just like certain exchanges will only buy and sell or let you trade certain coins, certain wallets will only let you hold certain coins. So it's like I opened up my wallet and I tried putting in a MasterCard credit card, and the wallet just was like, I don't want that. You can't put that here. Go put that in your MasterCard wallet. Excuse me? That's not how this works. In cryptocurrency, that's exactly how it works. Each wallet will choose what coins you can put inside of that wallet. So there's two words that are used for when you're trying to say what kind of a wallet it is. There is either hot wallets, which are wallets that are connected to the internet, or cold wallets, wallets that are stored offline. Each one has its advantages and disadvantages. Hot wallets are great because it's quick and easy to buy, sell, or use the coins in that wallet. They're always connected to the internet, but it's also, because it's connected to the internet, it can get hacked. Someone that can hack your network, hack your internet, or hack your computer can then hack those coins. Well, the alternative is cold wallets. These are a little bit trickier because you can't buy and sell them as quickly, but they're offline. So everything is stored wherever you want it. You can have it on a flash drive, you can have it on your computer, you can have it on your phone, you can have it on an SD card. Take your pick. But you can have it somewhere that you can unplug it so no one can touch it. Now, wallets are not always free. Some wallets are free, while others will charge you to be able to use that wallet. So, I think that we've covered quite a bit. What a cryptocurrency is, how you get these cryptocurrencies, what in the world they do, where you buy them, and where you store them. So now, Joe, that is a great point, and I'm going to get to that in the pros and cons, because that's right where we're going right now. What are the pros? Why are cryptocurrencies great? Because they're not controlled by a government. They're not controlled by an agency. They are not tied to the health of that country's economy or even the health of that country. They are international. They rely on the global economy instead of a single country's economy. Likewise, A single coin can be bought in the United States and then spent in Belgium. You didn't need to convert it to whatever the currency is. I think they use the franc, I'm not sure. But you don't need to convert it to whatever the local currency is. One Bitcoin bought in the US is one Bitcoin everywhere else in the world. Then the next thing is money can be printed. Inflation can happen and does happen because the US is always printing more money. These mints still run every single day. They keep printing money, and that money keeps going out in the world. But cryptocurrency, that's not the case. There is a maximum amount of that coin that can exist, which means as long as the demand for that coin is the same, if not more, the value of that cryptocurrency will only go up over time. Because there is a limited supply, and for every Bitcoin, rather for every currency coin that is added, the next one is a little bit harder to get. We don't even need to get to the highest number possible. Because the next coin is harder to get, getting that coin is a little bit more expensive. But that's kind of the point, is that it is something that there's always more coming into the market, but not much. And the amount is slowly trickling down. Now, the next point is that blockchain is an incredible thing. It allows for decentralized systems where a group of computers manages this network. No one person holds all the power. No one person has the key to the entire empire. Everybody does their part. And no one place stores the entire blockchain. The blockchain exists and is kept up by all of the computers working together. But because of that, it also makes fake money or fraud near impossible. So it's a very safe and secure currency in that no one can create fake $100 bills and go start spending them at their local Macy's. One Bitcoin mined is one Bitcoin added to the market. One Bitcoin sold is one Bitcoin bought. That's the end of it. And the last one is what I mentioned before. Blockchain creates a lot of possibilities for medical research, technological research, applications for quantum computing, and more, where instead of needing a supercomputer that costs hundreds of millions of dollars, if not billions of dollars to build, and even more money to cool, because these computers, they run hot. Instead, I can use the computer that I have right underneath my desk and Kira's computer over there, and we can work together to maintain the blockchain for whatever cause we want to. That's kind of the fun of it. You get to find something that you contribute your computer to a good cause or a cause that you like, and in exchange, you get something back. Coins. A form of currency that holds value, but that value is only what someone is willing to pay for it. Now, the cons. And I had to split this up into 2 different slides, so I apologize for that. Well, the first one is from the whole legal standpoint of things. Cryptocurrencies are not regulated by any organization. Fake coins can exist. Someone can create a fake coin just because they want to make some money and scam some people. Yes, fraud in Bitcoin is rare, if not impossible, but cryptocurrencies and all of these small coins, they're not. I've long told the story that back in the Wild West of the Roaring 20s of 1929, 1930, part of what contributed to the crash was people would trade fake companies. This can happen with cryptocurrencies too. People create a fake coin, start pushing it on the internet saying, hey, go buy this thing. Go buy this thing. It's really cool. Go buy this thing. When it releases, it's absolutely nothing. It's not worth anything, and it was all a scam. You can't report it to anybody. It's not owned by anybody. There's no one person that you can say, hey, this is your problem or this is your fault. Then the next one is that computers can be hacked and they can be stolen. And with it, so can your coins. I said before that cryptocurrency is very secure because of this crazy 256-bit encryption. But the weakest point in this system is you. As much as I hate to say it, people like you, me, and anyone that owns a computer is the biggest security risk in this entire system. Because they don't need to hack the blockchain. They just need to hack your computer. And they basically have access to, if they have access to your wallet, to your bank essentially. Then the next one is a very long story I'm not even going to get into, but I'll just say it because it's pretty self-explanatory. Coins, because they're not owned by a government and because they don't leave a paper trail, can and have been used for illegal activities online because they are an absolute joke to launder. Remember, all of this is created for decentralization and anonymity. So with that in mind, it's very easy to buy cryptocurrency and then use it for something illegal and never have your name tied to it. So because of that, a lot of people don't like cryptocurrencies. They think that cryptocurrencies, the only reason that they exist is for illegal things to happen. But if that was the case, cryptocurrency, mainly Bitcoin, wouldn't be worth $37,000. But this is also worth mentioning. Because there is no company, there is no underlying asset, it's not backed in anything that has value, many investors, and I will say this right now, myself included, believe that most cryptocurrencies are a speculation bubble. They do not have any real value, and the value is only what someone is willing to pay for that today. No one knows what they're willing to pay for it tomorrow, and you can't look at a company's fundamentals. You can't look at their earnings per share or their beta. All you get is what it's trading for in the market. So because of that, it can be something that is hard to say what the real value is. The value is only what you're willing to pay for it. So what if you end up buying something that's well overpriced? You have absolutely no way of knowing that. Now, I'm going to go through a couple of more cons. For some reason, this one popped up first, but cryptocurrency exchanges are not regulated. There is no FTC that looks over all of these exchanges. The major ones, yes. The major ones are very secure. But smaller exchanges can and have been either hacked, or the people that run that exchange just take all of the coins in that exchange and run with it. They literally just steal the entire thing. And because a lot of people that get into cryptocurrency love anonymity, no one questions it when you don't know who owns that exchange. So what's stopping that anonymous person from taking all the coins in that exchange, running with it to Antigua and Barbuda, and that's the end of the story? Well, that has happened, can happen, and will likely happen again in the future. So it's a very big red flag and something to keep in mind. And remember, as we mine more Bitcoin, as we mine more crypto, it costs energy. My computer costs a lot of energy to run. To run my computer for a month is probably $100 of my electricity bill. So these computers are not cheap because doing stuff takes energy. Energy becomes heat. Heat requires cooling. I have an AC for my computer, just like I have AC for my house. But it costs money to cool my house. In most places in the world right now, you cannot make money mining mining Bitcoin or mining Ethereum because the cost to run the computer is more than you would get back from the blockchain. So what a lot of people have done is invested millions of dollars into supercomputers in Greenland and Iceland and Finland and all of these North countries, because they go up there and they will use just the breeze coming through and the freezing cold temperatures year-round as cooling for their computer so that they don't need to spend as much money on energy or on their utility bills. It sounds crazy, but I kid you not, you can go and do research into these mining factories that they've set up in Greenland and Iceland because it's so cold that they just open up the door, let the cold air in, and that's how they cool all of their computers. Now, something that Joe said before. Remember that a lot of these coins are stored on a flash drive or on a hard drive. What happens if that hard drive is destroyed or you forgot that it existed? Well, those coins are gone. It's not like the washing machine where you can take a dollar bill out of the washing machine and it will still work. No. If you wipe that hard drive, those coins are just completely gone. And if you didn't back them up, I guess there's a couple less Bitcoin in the world now. And that's a real problem. It is a real problem that money in the world, that cryptocurrencies in the world disappear and will never be gotten again. Because remember, we can't create more. Once we hit 21 million Bitcoin, that's the hard wall. So what happens if 2 million Bitcoin got deleted? It's not Satoshi's problem. It's not any of our problem. That's just part of it. And then the last thing, and this was to what someone asked, are cryptocurrencies tax-free? They are not. Cryptocurrencies are charged, and any profits or losses you record are taxed as capital gains as if they were normal stock investments. Additionally, exchanges like the major ones that I've covered already, they will be audited by the SEC and the IRS, and they will have to report on the earnings, profits, and losses of everyone that invests in their group using a US IP address. So just like when you open your checking or when you open your brokerage account, they ask, where do you live? If your IP address, which is your online address, says United States, you get charged. You have to pay taxes for anything you generate. When you deposit money from one of these cryptocurrency exchanges into your bank account, that is a record. And those records are capital gains. Capital gains are taxed by the IRS. So let's now go. I'm going to stop talking about the negatives because cryptocurrency is something that is fascinating. I love technology. I love the internet, and I love the power that it gives people like me, where I now have a powerful computer that I can donate my power to something that can benefit either the blockchain or something bigger. So for all of you that are interested in crypto, I want to give you my, not so much advice, but things to keep in mind to manage some of these risks. Well, how to avoid these risks is simple. Keep track of your profits and losses, just like you would with your stocks, and report any earnings that you create from your investments in cryptocurrencies as taxable gains. Pay your taxes on it. The IRS will find out about it. The next is use only major reputable exchanges. These can be easily found by going to Investopedia, where they have a list of major exchanges and what coins they offer. But don't go to the small guy. Go to the big exchanges that have backing, have a track record, and have a lot of money going through them every day. The next is creating backups of your wallets. Most wallets will offer what's called a seed phrase, where they'll give you man, dog, person, woman, TV. And they'll give you a list of words that you then write down and remember. So if you ever want to go and restore your backup, you give them man, person, TV, bird, whatever it is. So by doing that, that is how you create a backup. So they will make it easy for you to back up your wallet. So in case it gets lost, or in case, your computer just decides to catch fire for some reason, you can still get your stuff back. The next is only invest in major coins. Now, this is not just Bitcoin. There are many other coins that are out there. Ethereum is another very large one. Litecoin is another very large and one of, I think, the second oldest cryptocurrency. No, his password for the backup was MAGA 2018 with an exclamation point. I kid you not, that was actually his Twitter password. But if you're going to invest in these major coins, if you're going to want to invest beyond these major coins that have a track record, please do your research. Go look into their white paper. Make sure that it is legitimate and this is something that you A, believe in, but B, will get your money back from. I can't tell you how many scams are in the market because people say, cryptocurrency is so cool, I want to buy the next Bitcoin. You're more likely to get scammed by trying to buy the next Bitcoin than if you just bought something like Litecoin, Ethereum, or Bitcoin. And the last one is simple. Only store your coins in reputable and trusted wallets. Again, Investopedia lists a good deal of wallets, but exchanges will also recommend wallets that will offer the cryptocurrency that you are looking to buy or sell. Now, there's a crazy further amount of information I can get into because remember, I've shown you just the tip of all of this. This is what you can expect as an average investor. But the people that are interested in cryptocurrency are not just investors. They are people, and I use this term very strictly in the belief that government shouldn't own everything, anarchists. They are people that believe that the government should not control all of our finances or all of our money, give the power back to the people, make currency global. So will Bitcoin ever replace US dollars? No. Because the US dollar is backed by the Federal Reserve. It is backed by something that exists in the world. So, no, Bitcoin is never going to replace the US dollar. But what it can do is become something that instead of going on vacation to France and paying everything there in euros, instead you buy Bitcoin, keep it in a wallet, and then you can use your Bitcoin wallet on your vacation in France. So it will always be additional to government-run currencies. The one thing I can say is I do see a future where governments adopt the blockchain as a way of decentralizing, but also reducing their liability in making sure that all transactions that happen are real, legitimate, safe, and secure. So that's all I really have to say today about cryptocurrency. If you have any questions about anything like this, would like further information, or are just genuinely curious, please shoot me an email at support@sectorsmadesimple.com. I would love to continue this conversation with you over there. But that's all the time we have for today. Thank you all so much for joining us for today's webinar. Next week, I want to have a very fun webinar because, like some of you have noticed, there have been a couple of changes to the dashboard, to the matrix. So next week, I want to go back through and go through what resources we've covered, because Sectors Made Simple has been around for 7 months now, which means that we have had 7 times 4.5 hours of webinars. I've talked a lot to you all. So I want to recap what opportunities for just investing in ETFs and investing in stocks using the matrix, what opportunities there are, some free websites that you can use to help your investing strategy, but how all of this here at Sectors Made Simple, we make all of that and finding your next ETF, sector, or leading company in the leading sector that much simpler to find out. So if you're curious to learn more about that, please join us for next Friday's webinar, where I will be showing you all the matrix, talking about how the matrix can be used as the end of your investment decision or as the beginning of your exploration. So thank you all so much for joining today's webinar. I had a blast getting to be able to talk to you all about this, exposing you to something that is a little more crazy out there, but an investment opportunity nonetheless. So thank you all so much for a fantastic webinar. Members, will see you all on Tuesday, and everyone else, we will see you all on Friday for a lovely look underneath the hood at what we're up to here at Sectors Made Simple. Thank you all so much for joining us, and we'll see you all very, very soon. Take care, everybody. Have a great weekend.